Practically everyone has heard of nuclear meltdowns before. Terrifying and deadly effects are felt long after it occurs, but very few know what a nuclear melt-up is and how it could deliver investment gains like you've never experienced before. We reveal what this market phenomenon is and how to profit from it for free in this video. Now, a nuclear melt-up is simply a bull market run in uranium resource stocks. At least that's the way Gerardo describes it. However, he says the important thing to grasp is that they usually happen 1 to 2 years after a bull market has started, and often because of a large gap between the projected demand and existing supply of uranium. Now, the phenomenon has happened twice before already, and Gerardo believes the current melt-up could be bigger than both previous run-ups. Now, one important thing to understand in all this is that the uranium market is very tightly controlled. In both previous melt-ups, supply shocks were the catalyst. Now, during the first melt-up in 1973, there was a growing demand for uranium as a new source of energy. As a result, the price of uranium jumped tenfold. Second melt-up, which happened 3 decades later in 2006, it was a similar scenario. There was a flooding at Cigar Lake, which at the time was one of the largest high-grade uranium deposits in the world, and all it took was this one critically important mine to flood, and the price of uranium spiked 13-fold, or a 1,300% gain. Unfortunately, we may get another shot at a melt-up, and Gerardo, he has 5 reasons why this next nuclear melt-up will be even bigger, and 3 uranium stocks to buy to profit from it. Now, this is where Gerardo's pitch really begins, because all 3 of his picks are revealed in a special investment report called Nuclear Melt-Up. 3 uranium stocks that could make investors a fortune. And I'm just going to show you what that looks like right now, if I can find it in the teaser, as it's a long one, to say the least. You can see all the times he mentions melt-up just in this presentation. And yep, here is the special report that is being teased. Now, the only way to get your hands on this report is with a subscription to Gerardo's Junior Resource monthly newsletter. This newsletter, it costs $199 for the first year, which is a discounted price from the usual $399 per year. And included in the subscription is a 60-day money-back guarantee, 12 issues packed with Gerardo's financial research, a model portfolio, model portfolio containing all open investment recommendations that Gerardo's made, and access to a growing collection of special investment reports. If you're watching this right now, you can skip all this because we revealed Gerardo's 5 reasons for a nuclear melt-up and his 3 stock picks. And for that, we're going to jump over onto stockexposure.org, as these are live over there right now. As you can see, the first reason that Gerardo states is government incentives. Things like the signing of the Inflation Reduction Act, which contained nuclear power incentives, helped push up prices, and it's likely to continue. Reason number 2 is the continuing uranium supply and demand gap. Now, the world needs about 200 million more pounds of uranium each year than is currently being produced, as this chart shows. And the gap is projected to continue to widen between supply and demand. Number 3, he lists green incentives, as uranium is, after all, the world's #1 source of clean energy. And number 4 is bipartisan support for uranium mining, as in early 2023, the Office of Nuclear Energy certified the first small modular reactor design in the country. So all economic drivers are coming together, including, it's a big one, institutional investment. For example, the likes of Peter Thiel, he's backed Helion with over 570 million to build its first reactor by next year. Bill Gates has funded TerraPower, which has raised over 750 million to build next-gen nuclear reactors. And we've probably all heard about Amazon and others recently in the news investing in nuclear power. So, what are the 3 uranium stocks that give us a chance to make a fortune for ourselves from this trend? We get several clues about each of Gerardo's 3 picks in his teaser. And for the first stock, which he calls America's next uranium producer, he says this company has both its NRC license and its final EPA permits after a decade of waiting. Furthermore, it's sitting on a massive uranium deposit of at least 46 million pounds. So, what is Gerardo's first pick? Well, it is an Encore Energy Corp, EU ticker symbol on the NASDAQ. Now, we did admittedly get some help as several other analysts have already revealed this pick online, and it is estimated to have as many reserves as Gerardo mentions after selling a 30% stake in its largest project last year. But what about the second pick? Gerardo calls this an uranium rocket ship that's ready to soar. Now, it's not literally a rocket ship play, as some of those are around today, but he says during the last boom, this stock went from 16 cents to 7.50 for a gain of over 4,500% in only 2 years. The company already has nearly 300 million pounds of uranium across all of its projects, and it's also been warehousing uranium in anticipation of higher prices to the tune of 1.7 million pounds. And we also were able to reveal this one, and that is Uranium Energy Corp, UEC, on the NYSE. Chart of UEC, it confirms that the stock went from 27 cents to $7 between 2008 and 2010, which I'll try and bring up in a moment here. And UEC's first 4 projects combine for about 120 million pounds. Now, that figure is lower than Gerardo quotes, but it's still the largest pure uranium play located in the US. And UEC stock chart, you can kind of see it bottom bouncing in, or about to bottom bounce in 08, and it's run up to today. But what is Gerardo's final or third and final stock pick? Well, we have some more clues on that as well. And he says it's a stock that could deliver 30 times our money in just a few weeks. And it's a Canadian mineral company that's engaged in acquisition, exploration, and development of uranium assets. And in late March of this year, the company announced the most significant exploration program to date, targeting Canada's most prospective regions for high-grade uranium discovery. And that clue, there we go. So what is his last and final pick? So Gerardo's last pick is none other than Atha Energy Corp, and that's SASK-F on the OTC. What gave it away really was the description, as that is exactly how Atha described itself on its website. And earlier this year, Atha announced the commencement of drilling at the Agilac project, which is one of the highest grade deposits outside of the Athabasca Basin. So, can we really transform $1,000 into as much as 1.3 million with this trio of picks? This headline is National Enquirer level of sensationalism on the part of Gerardo, but crazy things have been known to happen in the junior mining space, and this could be one of them. I'm just going to quickly give my thoughts on each of his 3 picks, but before I do that, let me just say that the macro backdrop for uranium is brighter than a radioactive element. That's because 2 of the biggest growth industries in the world, crypto on one hand, AI on the other, are both energy vampires. And nuclear energy is the only viable and clean way to meet their growing energy needs. So all three of these picks do have positive macro headwinds behind them, and here's how they stack up from a micro standpoint at the individual level. Encore, it does have a huge share capital, no profits, and only 55 million of cash on its books. So more stock dilution is coming for Encore, unfortunately, and its shareholders. Now, in terms of UEC, it does have better underlying fundamentals, more reserves, more cash, no debt, and given its financial strength, or I should say, this gives it the financial strength to develop its projects to completion and expand. A much better pick. And finally, our third and last pick, Atha Energy Corp. It's a junior explorer in the truest sense of the word. And this is, unsurprisingly, the most speculative pick of the bunch, but also the one with the most upside. So overall, we have one business that we should avoid, which is Encore. We have one that is a decent buy, which is UEC. And we have a speculative moonshot, Atha, in that order. So just to quickly recap and conclude everything we just covered, Gerardo, he teased a nuclear meltup and how it could deliver investment gains like we've never seen before. We learned that a nuclear meltup is simply a bull market in uranium resource stocks, and the market phenomenon has happened twice before. Gerardo believes this time around will be even bigger. Now, he goes on to say that there are 3 top uranium stocks to buy right now, and they are only revealed in a special report called Nuclear Meltup. 3 uranium stocks that could make investors a fortune. Now, we got to the bottom of things and we revealed all 3 picks right here for free as Encore Energy Corp, Uranium Energy, and Atha Energy. And as we just said, overall, we have one stock that we should avoid, which is Encore, a pretty decent buy in UEC, and one that is a speculative junior minor, and that is Atha in that order. Now, if you got absolutely anything out of this video, if you learned anything, had some fun, hit like, hit subscribe, as we have much more on the way, and let us know down in the comments if, or I should say, what the best way to play the nuclear energy market is. Let us know what your favorite way is to play it. Until next time.